Would you walk away from a 3% mortgage? Actually, comment below before you watch the rest of the video. I'm going to show you how I just helped a client reach financial freedom by giving up her 3% mortgage for an 8% rate. We're going to pay off this home in 4 years versus 24 and a half. Most people love their low interest rate that they walk around proudly like it's a badge of honor. Just because you have a low interest rate doesn't mean you have high freedom. Using this one strategy can literally change your life. And as a mortgage lender for almost 20 years, this is the best product that's out there and you need to understand how it works. And it's called a first lien home equity line of credit. And all you do is you basically use the HELOC as your checking account. Anytime you make a deposit, it lowers your balance, which lowers the effective interest of what you pay on your mortgage. And the beauty of this loan is that you have access to this line of credit for 30 years. Here's what I did with our client. He owes $250,000 on his home. It's worth about $620,000. He's currently at 3.125%. He's had his loan for 5.5 years. His take-home pay every month between his income and his rental is about $17,000 a month. He's got about 20 grand in his checking account that we're going to deposit that towards the HELOC. At the end of the month, he's got about $4,000 left over. So again, we use this just like our checking account. He's got $17,000 going in. All his bills get accounted for. $4,000 lives on the line of credit. Now, a lot of people see that and they think you're making an additional payment. We're not making any extra payments on this loan. It's literally about depositing your income and all your excess cash lives on the line of credit. You have access to it for 30 years. You can draw on it to pay for whatever you need, just like you would your checking account. So here's his current mortgage, 24.5-year payoff if he took it to its full term. Here's our HELOC. We're going to refinance that same $250,000. We're paying the loan off in 53 months, saving him $60,000. That $60,000 is worth about $13,000 a year in interest savings. Our average interest rate of what we're using to model this scenario out is 8.3%. And again, when we look at the effective rate of this $47,000 in interest of what we're paying, that is the equivalent of having a mortgage of 1.1%. And because the banks love keeping us in debt, you can see here, if he stayed in his 30-year mortgage, in that same 53 months, he would have only paid down $32,000 of mortgage, still owing $217,000. In our HELOC situation, oh, my computer died. Well, now we're back. In our HELOC, we will owe nothing in 53 months and have access to $250,000 on a line of credit. So would you stay in your 3% mortgage and still owe this money, or take an 8% mortgage, pay this off? What's wild about this, and literally proves my point that the banks have us brainwashed, is that so many of you will stay in this 3% mortgage simply because it's a 3% mortgage and this is an 8% mortgage. But the thing you fail to recognize is the fact that even though it's an 8% mortgage, this is your effective APR. This is what you're truly paying back, 1%. Why would you say no to that?